Hey guys, what I want to do is share this quick video. It's going to go over a bunch of trades that I've taken in my live Oanda account. Now, as some of you who know me know that I don't like demo trading, so because I believe it doesn't simulate real world trading. How many times have you or maybe know somebody that traded great while they're demo trading, and all of a sudden they get into real world trades and they start losing money again and again and again? It's because when you're demo trading, there's no money on the line, there's no pressure, so you can think clearly. So this account is just one of many accounts I have, but this is like what it's a test account where if I have an idea, I want to put a little bit of money online. I don't go crazy, very small leverage. This is a got about 36 or $3,700 in this account. But when I'm first testing something out, I start very small lot sizes, as you can see here. But the point is, even though I'm not risking a lot of money on a trade, it's what I call my coffee and croissant trading accounts. In other words, if I lose, I'm going to lose breakfast, right? If I win, I might be able to buy myself a coffee or a croissant or both, right? But the point is, at least, you know, I've got something on the line. I would rather win the money, even if it's small, than lose it. It's also good for those of you who maybe are a little bit scared. Okay, you don't want to risk a lot of money, and you also don't have a big account. Okay, and you'll be able to see that it can still add up. So, in this particular video, I want to highlight to you really, the song, the classic song, "You Can't Always Get What You Want" from by the Rolling Stones, right? Well, in that song, the line was, "You can't always get what you want, but sometimes you get what you need." And this is the lesson I want to share with you. Okay, so let me explain what Mick Jagger is talking about here. This is over about 3 days of trading, and keep in mind, the first thing you'll notice is, once again, the lot sizes are small. There's not huge trades. The idea of this account, of this particular thing I'm testing out, is I'm not looking to scalp. Okay, in other words, to me, scalping is usually 5, 6, 7, 8 pips. You're in and out very quickly. Okay, these were like what I call short-term trades, where I'm hoping that within half hour, maybe a few hours, I'm going to grab as much as 40 pips. Now, this is the very important thing to understand, please. All these trades, I had at least a target of 30 to 40 pips. Okay, that was my desired goal. But getting back to the song, you can't always get what you want. So even though I had a target of 30, 40 pips on these trades, a lot of them didn't go there. Okay, they might have gone up 20 pips and backed off, and I had to lock something in. Okay, so very important thing to keep in mind, that just because you want it to go somewhere, the market doesn't care. It may go there, it may not, and you have to deal with it. That's the reality. And also, I can't tell you how many times where maybe it might get within 5, 6 pips of my target and then it backs off. Okay. I've had other times where maybe it might go within a pip of filling my target while I'm sleeping. Then I come back and it's back. It's already given up 70, 80% of that. That's just trading. Okay, I've had other times where it hits my target just by a pip or two, and that was the high of the move, so I lucked out. So sometimes you do good, sometimes you don't. Okay, but the thing is, you have to deal with the situation as they come, and also understand that the markets are very choppy. They trend less than 20% of the time. Pull up any chart, you'll see what I mean. It's just a roller coaster, especially in the summer months now. There's so much uncertainty in your world with all the unrest, the COVID, people are going crazy, locked inside. There's also tens of thousands of new traders coming into the markets each week who are bored. They want to make some money online, and so this is even causing more erratic volatility in the market. So, with that said, let's look at these real world trades here. Now, back on the 26th, okay, I just had 2 trades. Okay, you can see the lot sizes were 2. Came in with this Japanese, and now this is the important thing to realize. I came in the morning of the 29th. This is, I believe, GMT time. Okay, but for me, I believe it was something like 5:45 in the morning, all right? And I was hungry. This was a Monday morning. I wanted to make something happen, right? So my first mistake, even though I've been trading more than 20 years, is I started relaxing my rules. I said, don't worry, it looks good enough. You've been trading a long time. Just go with how you feel, right? So what happened was I had, if you look on the right side of the chart, 1, 2, 3, 4, 5, 6 losing trades in a row. Now, I don't get that many, okay? And I don't say that to brag, but normally if I get 3 losing trades in a row, that's a lot. Usually I might get 2, then I'll start to get a string of winners, then I might have 1, then a couple losses here and there. But something was definitely off, and what was off was because I was trying to force trades. I was chasing the market. If it would kind of go up a little, I'd say, oh, it looks like it's going up. And if it was starting to reverse, I'd say, oh, I'll reverse and go the other way. And I got whipsawed around, a classic novice mistake. Okay, you know, I should slap myself silly for doing it, but I did it. But here's the important thing, okay? And also, you'll notice, once again, it wasn't a very small hits. Doesn't make a difference, okay? I'm not going to lose sleep over that. But what tends to happen is most traders don't like losses, and I don't like them either. But what happens is when you start to get 3 or 4, you get a little worried. Most traders might say, oh, God, you know, I don't know what's going on. Should I maybe take a breather? Maybe I need to double check my strategy. Maybe they might take the day off, and it's going to be even more amplified after 5 and 6. Now they're really getting concerned. They're questioning themselves, their system, and this is what happens. Typically, they may quickly start looking at adding more rules, more indicators, jump to another system and think, oh, this system's crap, and so forth. So they don't stick with it. But inevitably, what happens is the minute you sit out, the trades that you sit out in would have been the winners. So here's the deal. I know better. So I said, you know what? Down here, I saw a trade, and then you can see I got 1, 2, 3, 4, 5, 6, 7 winning trades in that day. No, wait, let's see. Blah, blah, blah. 7, 8. I'm just going down here. 8. 9 winning trades after 6. Okay, and then I had a couple trades that were filled overnight while I was sleeping on the 30th. Okay, so not a super huge high winning percentage, right? But still on this small account, 2677. So I was really proud of myself because I just said, you know what, just keep going. Once again, it's not the money, but it's, you know, the ego, and I want to be right. And I just said, you've been here, just fight your way out. And please, guys, you have to understand that when you get some losses, you got to keep swinging, all right? And just go with the flow, as they say. Now, let's switch to a different graphic representation of what happened here. This, okay, particular graph here represents my journey of those trades. So over here, this represents the trades I took. The losing trades started to come in, right? So I started out in a hole that morning, okay? But that's where I said, nope, keep going, okay? And then could see there was a steady climb. It went sideways for a couple trades because I had these small, like, I don't know, 27, you know, a couple pip losses, stuff like that. And then just started climbing up. This is what you want to see. Now, normally you don't want to have, or you want to try to avoid, you know, having 4, 5, 6 losses. But even if they do, it doesn't matter. You just got to keep going. Just keep the losses small. This isn't some very important stats. You can see that my long position is not a huge winning. 57%. A lot of you might say, oh God, that's not very good. Okay, but still, my equity curve climbed up, right? My short positions were significantly better, okay? But here's the important thing, okay? You can see my average profit per trade was 242. Average profit or loss was 67, so my average profit was almost 4 times bigger. So many times traders, they're lucky if they can maybe make 1.5 to 1, 1.25 to 1. Okay. So, just to wrap this up, just keep going. And just one last thing, you might once again think, oh, well, 2 lots, 2 micro lots, big freaking deal, right? This is a test account. I'm not trying to get rich. I have many other trading accounts, but I'm just trying to test something. And part of the reason is I'm going to be bringing new strategies to you, and I first need to start out small. I'm not going to risk my own money. In other words, I wouldn't take big losses just to try to impress you if something's not going to work. And I'm going to start ramping this thing up. I'll go to 3 micro lots, 4 and 5. Also keep in mind that any given time, it's not like I'm just have a 2 micro lot trade on. I might have 4 or 5 positions on, right? So say I have 5 2 micro lot trades. That's 1 mini lot, which represents $10,000 of a currency. Okay, so it's more of a bet than just making one little tiny 2 micro lot trade. And now all you have to do is say, okay, let's say you weren't trading 2 micro lots, you're trading 2 mini lots, all of a sudden the number here would be $260 for your 2.5 days of trading or whatever. That's not bad. 130 odd dollars a day. Okay, and then you just multiply from there. So once again, you have to understand that just keep going. Okay, and then also the market doesn't always give you what you want. And let me do something real quick here. I want to bring up a drawing tool. All right, last thing I want to do is just once again show you that idea that when I got in, let's say I'm getting into a trade, and let's pretend it's a buy trade. When I'm getting in, I'm not saying, oh, I only want to make 3 pips or 5 pips. Usually my target might be, let's say 30. It could be that. Maybe it was up here, 40, something like that. That's not a bad target for something if I'm trying to get it within a few hours. That's what I want. But as Mick Jagger said, you can't always get what you want, but you get what you need. So I get in with the best intentions, but you do not know. Maybe I would have gone in and it would have done that. Stop me out, right? But often because the markets are so erratic, it might go here, up 15 pips, and then come back here. And once it's up like 15 pips, I'm at least going to lock in a pip or two. I want to get something, and that happens to me here and there. So I end up with, 2-3 pips, even though I wanted 30 or 40, right? Other times it might do that. Then it'll start to get up, and I'll say, ooh, great, it's getting near my 30, but it gets to 27. Now it starts to, back off. So if I'm near my computer and I happen to notice this, if I sat through all that, I might say, you know what, it was close to my target. I'm gonna run a tight stop. So maybe I might end up at 20, whatever. Okay. So you see where I'm going with this, but every time it's different. I don't know. I have a goal, but it doesn't mean you're going to get it. And that's the very misleading thing about trading programs, where people say, oh, I have at least a 3-to-1 risk-reward ratio. That's their goal, but are they getting it? Okay, very different reality. So anyway, guys, this video is getting a little bit longer than I intended, but I wanted to show you how things play out in the real world and how you can just, think your way out and just push your way through when you're hitting any kind of obstacles. That's it for now.